the Fed's biggest nightmare is not inflation, it's deflation. Because once deflation takes hold and they're not able to reflate the system, then all the debt comes down. And guess what? All these fiat currencies are backed by debt. So once debt begins to and actually fails, then the value of all these currencies basically goes to zero. Be careful what you wish for, because $5,000, $10,000, or much, much higher gold prices means we're either approaching or have already attained, if you want to call it, Mad Max world.
In a cautionary statement, BillHolter, a precious metals broker at Miles Franklin, warns that if the system fails to reflate and experiences a collapse in debt, the values of major currencies could plummet. Holter underscores the potential implications of substantially higher gold prices, proposing they indicate an impending or ongoing crisis scenario. Gold prices experienced an upswing on Tuesday, propelled by a 0.1% decline in the US dollar index, enhancing the appeal of greenback-priced gold for holders of other currencies. As investors awaited interest rate decisions from various central banks, concerns about the U.S. national debt lingered. The national debt has surpassed $33 trillion at 123% of the country's annual output. Inflationary shocks and interest rate increases have escalated the cost of servicing this debt, raising the specter of a potential default. According to BillHolter, the consistent suppression of gold prices over the years is driven by the fear of exposing the U.S. dollar as potentially devoid of intrinsic value. Western governments, including entities like the U.S. Treasury, its Exchange Stabilization Fund, the U.S. Federal Reserve, allied governments, and central banks, are implicated in manipulating gold prices daily. This manipulation occurs frequently, sometimes hourly, to control and artificially suppress the value of gold. The primary motivation for these efforts is safeguarding bonds and other assets by managing internal competition. Following the crash of the gold pool around 1968, countries like the U.S. shifted to more covert methods of manipulating gold to maintain control over its perceived value. Highlighting Russian President Vladimir Putin's considerations, BillHolter mentions Putin's contemplation of backing BRICS currencies, including gold, silver, oil, gas, and grain. With Russia assuming the chairmanship of BRICS in 2024, Putin's vision emphasizes a robust commitment to global development and security. Both nations have accumulated substantial gold holdings because of China's leading position in global trade and Russia's wealth in energy reserves. This accumulation could replace some uses of the US dollar, indicating a shift in the global economic landscape. Join us as we delve into insights shared by BillHolter. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
I think I can sum it up with one word. It's called power. Under a gold standard, they cannot print limited amounts of money. And the fact that they're able to do anything via printing gives those in charge power. If they don't have that printing press, if they're not able to do that, then they don't have power. In the case of the US, because it is the world's reserve currency, gold is the direct competitor. Some people may say, well, no, it's the euro or the yen or the British pound or what have you. They're all fiat currencies. They're all turds in the same bowl. Gold is the direct to the dollar. And that is why for all these years, you've seen the gold price suppressed. You've seen the media basically tell you, don't buy gold. It's scary. It's risky. It's dangerous. It's all because the U.S. is the world's reserve currency. They basically have had an unlimited ability to borrow. If the dollar was unmasked as being basically a worthless piece of paper because of the gold price goes to, like you said, 50,000 or 100,000 or whatever, if that were to occur, then you'd have a panic out of dollars, a panic out of treasuries. The U.S. would not be able to, the deficits that they've run year after year.
What I read, President Putin will be more forceful on this implementation of a gold exchange trading standard. Can you comment on what you know?
I think it would be good for listeners to actually read his speeches. I think he's done, since the Ukraine war started, I think he's done 7 or 8 public, and I'm not talking small speeches, I'm talking, 30 minutes or more. Read those. The reason I say that, I've read through them and I can't find much that I disagree with. I mean, the man simply wants to be able to do business with free and fair settlement. And the fair settlement entails getting paid. If you're going to give a product, you want to get paid in something that's real. That's what they're looking to do with the BRICS currency or currencies. They're looking to back with commodities / gold, silver, oil, gas, grain. Who knows, what the basket will be. But I would take the man at his word. I mean, he does not. He doesn't bluff. He's very. I think he's very forthright, and I think you can. When he says something to the world, I think that's exactly what he means and exactly what he does.
BillHolter notes a significant shift as Saudi Arabia and the UAE show openness to currencies beyond the US dollar. This development can accelerate the collapse of the petrodollar system, which originated in the mid-1970s when the United States and Saudi Arabia reached an agreement, ensuring that Riyadh would exclusively sell its oil in US dollars, with the US providing military protection and support in return. Putin outlines 2024 plans to strengthen BRICS' role with a growing list of interested countries. Holter references historical examples involving Iraq and Libya, where leaders Saddam Hussein and Muammar Gaddafi faced challenges and intervention, partly due to discussions about creating gold-backed currencies and selling oil in non-dollar currencies. Gaddafi, for instance, had proposed a vision for a unified Africa with a single military force, currency, and passport in 2009, which faced opposition, leading to his demise 2 years later. Let's get back to the interview.
You mentioned the BRICS went from 5 to 10 nations. Let's look at who some of those 5 new nations are. Yep. Iran, Saudi Arabia, and the UAE. Saudi Arabia, a year and a half ago or whatever, said that they would accept other currencies than only dollars. It's the first time since 1973. UAE, about a month and a half back, came flat out and said, we will accept all currencies around the globe except $4. That's huge. Go back to Libya, go back to Iraq. Saddam Hussein and Muammar Gaddafi their countries were invaded. Their gold was stolen. That's the first thing we did. And they were killed because they talked about doing a gold-backed currency. And they were talking about selling oil in non-dollars. The U.S. can't go in, attack Saudi Arabia or attack the UAE. From a military standpoint, we're no longer, the big guy on the block. The bully basically has had his bluff called. As far as the comments from Egon, keep in mind, I'm sure you both have read it, and hopefully your audience has read The Great Taking. And what that has to do is basically whether it's a bank or a broker or an insurance company, if you have intermediaries between you and your capital, you're going to lose your capital. So that's why I believe Egon is saying, buy gold now or you're going to lose your fortune because you're going to wake up, markets won't open, you'll call your broker and nobody's going to answer the phone. This is not speculation. These are laws that are already written on the books all over the world, where people who have bank accounts, brokerage accounts, insurance products, it's not theirs legally anymore. They're the beneficiary, but the owner of those assets are the banks, are the brokers, are the insurance companies, not you. So I think it's important to understand, that aspect of it. And I think that's probably why Egon's, so adamant at this point. And I would add one more thing. From a timing standpoint, my thought process is I would give it less than a 50-50 chance that the U.S. has an election. Don't ask me for what possible reason, whether it be real or a false flag or whatever. The powers that be that are in charge right now, I think they understand that if there is an election, that there's no way that they can cheat enough to be able to win. If they lose, then some semblance of a rule of law is going to take over, and you're going to see a lot of people going to jail. From the standpoint of not having an election, the most likely scenario would be some type of false flag. And you've got a financial market or financial markets that are teetering on a tightrope, and you get some type of false flag. It'll topple markets, and you've got over $2 trillion in derivatives that are going to blow up. So basically, in my opinion, my guess is that they're going to kick the table over prior to the election so that there's not an election. And then that will then lead to a domino effect where brokerage houses, banks, insurance companies, they go down.
A significant sign of something brewing is the BRICS countries shedding U.S. treasuries and replacing them with gold, with China leading the pack with central bank gold buying. Could these developments begin a transformative era in global economic structures? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.